Let's delve into markets on the hour. Chris Gilmour, investment strategist, investment analyst at Absa Investments, joining me on the desk. Chris, it's good to have you with us. Should we kick off with Alcoa and, of course, some of the commentary coming through about the global economy from the aluminium giant, the world's third largest aluminium producer? What are your thoughts on those?
I think a lot of this was due to better aluminium prices generally. And let's not forget that aluminium is very much a developed world type of metal. It's not something that has a particular degree of resonance in the developing world itself. But that's starting to change, albeit slowly. So I think really what took the market a little bit by surprise was the better aluminium prices. Perhaps surprised slightly on the upside when it came to revenue, although earnings very much in line. Look, it's traditionally the first of the big boys to actually report in the US. So I think we have to wait for the next couple of weeks to try and get more of an indication of a consolidation as to what's actually happening as far as composite is concerned in US economic growth. But this didn't disappoint, and I think that's a good sign.
Certainly is interesting if you look at their global breakdown in terms of sales forecast, because looking at, for example, in the heavy trucks and trailer forecast for sales in China, you've got growth there expected between 12 and 19%. And just looking at the building sector, the construction sector, growth there in China, 8 to 10%. So you've got that offsetting Europe, and of course still growth expected in the States. So overall, painting a very bullish picture on the Chinese economy, and that of course feeds through into local commodities here.
Absolutely. And you know, we've had some of the diversified mining companies coming out with similar, BHP Billiton, for example, with similar kind of good news out of China as well. So I think that's right. I mean, China's had its kind of little blip, its little bit of attenuation of growth, but it seems like it's very much back on track again. And I think we're probably going to be looking at 8.5% growth for China, for Chinese growth this year. And again, this is just underlining that. Yeah, that's good.
Looking at local resource companies today, I mentioned the fact that you've got the platinum miners outperforming the gold miners today, platinum price outperforming the spot gold price. And of course, it seems to be spurred by sentiment generally from investment houses where they're favoring PGMs over gold.
Yeah, and I think a lot of it comes back to what you were saying earlier. If we're going to see global economic growth picking up a bit, the demand for autocatalysts is going to go in line with that. Having said that, I think there's also an indication that for the year as a whole, for 2012, we probably ended the year, as far as platinum was concerned, in a little bit of deficit. There's still a big deficit lying from previous years, but we're going to start working through that, I think, as we go into 2013. So I think the likelihood is there, from a platinum metal perspective, that the actual platinum price could start showing a bit of an improvement.
Well, they're looking at the platinum price by 2014 reaching $1,810 a fine ounce, and saying that the gold price is going to sit at around $1,720 a fine ounce. That's Credit Suisse, and of course slashing their forecast for gold, and as I said, raising forecast for platinum. And of course, Anglo Gold Ashanti has been in the news lately, losing its CEO to Anglo American. What are your thoughts on that shift, or I suppose that move in many ways up the ladder for Kutafani?
Yeah, look, it's bad news for Anglo Gold Ashanti. Going to have to find a new CEO. But I mean, I've met Mr. Kutafani on a number of occasions, and he really is. He's a very engaging character, very bright guy, tough and gritty. He's precisely what Anglo needs. He's also very much an EQ rather than a singularly IQ type of person. He's very much a people's person. One of the first things he did when he went into his new office at Anglo is he took his door off and said, you know, I want to be transparent. He's got, I think, his people behind him. He's a hard taskmaster, he's tough, but I think at this point in time, when Anglo really needs a turnaround, it needs new blood. I think Mark Kutafani is going to provide it in dollops.
Certainly speaking to people from within the walls of Anglo American, a lot of optimism around that appointment. Talk to us about Richemont today, because just looking at the numbers here, we've got the top 40, which in fact closed at a record high, and the local market just shy of that today. Overall, all-share index, I mean. Absolutely.
Look, I mean, Richemont, we saw a report out of Barclays a couple of days ago, and it's their preferred stock amongst the luxury goods companies. On the watch side, we're seeing Swiss watch exports. A little bit of a lag in December because of the slight move in the Chinese New Year by a couple of weeks. But nevertheless, that's looking good. If you look at the actual composition of Richemont compared to many other luxury goods companies, it really is the best bet, I think. And I think, you know, there was also a Credit Suisse note out today, again saying that Richemont is their preferred stock, I think. So gave a lot of impetus to Richemont. It just keeps on going. It's telling you that wealthy people are still spending a lot of money. They've got confidence and they're not afraid to spend it.
I think it was Burberry, in fact, at the end of, I think, November, very bullish on December going forward and saying that the wealthiest are spending money on kind of niche items, and they're still spending. And of course, if you're buying into that theme, like the likes of Credit Suisse, as you're mentioning today, Barclays are buying into that theme. Would you still buy Richemont at 71 Rand 62 though?
We're holders of Richemont on behalf of our clients, and we certainly have got no intention of selling at this point in time.